Hello everyone, welcome you all. We know that the Constitution of India provides a dual polity with a clear division of powers between the Union and the states, both the government being supreme in their respective sphere. The Indian Federation is also not the result of any agreement between independent units, and the units of Indian Federation cannot have right to leave the federation. Thus, the Constitution contains elaborate provisions to regulate the various dimensions of the center-state relations. So the relation between the Union and states can be divided into three heads like legislative relation, administrative relations, and financial relation. Today our topic of discussion is on financial relation between the Union and states. The Constitution of India has made elaborate provision relating to the distribution of both the taxable as well as non-taxable revenues. In this regard, M.V. Piley says that no other federal constitution makes such elaborate provision as the Constitution of India with respect to the relationship between the Union and the states in financial field. The financial relation between the Union and state present in Part XII and from Article 264 to 293 of Indian Constitution. The financial relation can be studied under the following major heads like allocation of taxing powers, distribution of tax revenues, distribution of non-tax revenue, grants in aid to the states, role of finance commission, protection of the state's interest, borrowing by the state and the center, Inter-Governmental Tax Immunities, and effects of emergencies. So let's discuss one by one. First is allocation of taxing power. The Constitution divides the taxing power between the center and the states in following ways. The Union government has exclusive power to levy taxes on subjects enumerated in the Union list, where we find 15 taxable items. Likewise, the state legislature has exclusive power to levy taxes on subjects enumerated in the state list, which are 20 in number. Beside this, both the Union and the state legislature can levy taxes on subjects enumerated in the concurrent list, which are 3 in number. The residuary power of taxation is vested in the hand of Union, and the Union impose taxes upon gift, wealth, and expenditure. Second head is distribution of tax revenues. The 10th Finance Commission recommended that out of the total income of central taxes and duties, 29% given to the states. This is called as the alternative scheme of devolution. To implement this, 80th Amendment of 2000 came into existence. Another one is the 88th Amendment also added a new article 268A which deals with the service tax. That added a new entry in the union list of entry number 92C, that is taxes on service. Beside these two amendments, the tax revenue is distributed in the following manner. First is, under Article 268, taxes levied by the centre but collected and appropriated by the states. The taxable item in this category include stamp duties, bill of exchange, checks, promissory notes, policies of insurance, transfer of shares, and excise duties on medicinal and toilet preparation items which contain alcohol and narcotics. Second is, according to Article 268A, the tax levied by the centre but collected and appropriated by the centre and states. This includes service tax or taxes on service. Third is, under Article 269 of Constitution, taxes levied and collected by the centre but assigned to the states. This include items like taxes on sale or purchase goods in the interstate trade and commerce. For these, taxes levied and collected by the centre but distributed between centre and states. Under Article 270 of Indian Constitution, the taxes and duties refer to in the union list beside the item listed in Article 268, 268A, 269 and 271. Fourth is, under Article 271, the taxes levied, collected and appropriated by the union. This include surcharge on certain taxes. Next is, taxes levied and collected and retained by the states. The state government levy taxes on the 20 items of state list. This include land revenue, agricultural income, building, animals, boats, road vehicles, excise duties on alcoholic liquor, electricity, passengers and stamp duty, etc. The third head of financial relation is distribution of non-tax revenue. This head is divided into two parts like central revenue and state revenue. In the central revenue, the centre received taxes from major sources of non-tax revenue from post, telegraph, railways, banking, broadcasting, coinage and central public sector enterprises. Likewise, in the state revenue, the state received taxes from irrigation, forest, fisheries and state public sector enterprises. The fourth aspect is grants in aid to the state. The Constitution provides grants in aid to the state from central resources. It includes three types of grants like statutory grants, discretionary grants and other special grants. Article 275 empowers the Parliament to provide statutory grants to the states which have less financial stability. Likewise, Article 282 empower both the center and states to make any discretionary grants for any public purposes. Besides this, the Constitution also provides a special grants for a temporary period. It includes states like Assam, Bihar, Orissa and West Bengal, which given grants for production of jute and jute products. The next head of financial relation is Finance Commission. Under Article 280 of Indian Constitution, the President appoint a Finance Commission in every 5 years to make the recommendation to the President on distribution of the net proceed of taxes between the center and the states and between the states. With this, the Finance Commission also give recommendations regarding grants in aid given to the states by the center and the resources given to the panchayat and municipality of a state. The next head is protection of state interest. So, to protect the interest of the states in the financial matter, the Constitution have provisions like: first, is a bill which imposes any tax in which states are interested. Second is a bill which varies the meaning of the expression agricultural income relating to Indian income tax. Third is a bill which affects the principles on which monies are distributed to states. Fourth is a bill which imposes any surcharge on any specified tax for the purpose of center. Then bills can be introduced in the parliament only on the recommendation of the president. Another head of financial relation is loan borrowing by the center and states. The central government can borrow either within India or outside India with the security of the consolidated fund of India. Similarly, a state government can borrow within India and cannot borrow abroad upon the security of the consolidated fund of the state. So, the central government can give loans to any states or loans raised by any state. But a state cannot raise any loan without the consent of the center. Next head is Inter-Governmental Tax Immunities. Like other federal constitution, the Indian Constitution also contains the rule of immunity from mutual taxation. The property of center is exempted from all taxes imposed by a state or any authority within a state like municipalities, district board, panchayat, etc. Likewise, the property and income of a state is exempted from central taxation. So, the last head of center-state financial relation is effect of emergencies. When the national emergency declared under Article 352 of the Indian Constitution, the President can modify the constitutional distribution of revenues between the center and the states. Similarly, when financial emergency declared under Article 360, the center can give financial directions to the states. It gives directions to reduce the salaries and allowances of all government employees and to reserve all money bills and other financial bills for the consideration of president at that period. So from the above, it was clear that in the financial sphere also the states have less autonomy as compared to the union government. The 101st Amendment in the Constitution introduced Goods and Service Tax or GST, which significantly changed the environment of financial relation between the center and states. So to conclude, we may say that in the legislative relation, in the administrative relation, as well as in the financial relation, the central government or union government enjoy a superior position as compared to the state government. So that's all for today. Thank you.